Hello and welcome to Chart of the Day Cafe for Thursday, March 16th, 2017. I'll read our disclaimer quickly. Trading stocks is a high level of risk and viewers should complete their own due diligence on any stock or underlying that they intend to own. 100% of the content of this video and communique is intended for journalistic and educational purposes only. This video and all indicators, strategies, and articles herein should not be construed as investment advice. Not making any recommendations, always for your further homework. Hi everybody, hope you've had a great week so far. It's Thursday, it's one day past the big interest rate decision day. Janet Yellen decided to raise rates a quarter point, but she struck a somewhat dovish tone, or the market interpreted it that way. So it rallied yesterday, so let's go take a look at where things are now. We always start our videos off with a look at the Russell Index, and for that we use the IWM, which is the ETF that represents the Russell 2000, and we step back to take a look at it on a 5-year monthly time frame. We always look at the Russell first because we want to make sure that it's uptrending and showing strength before we put any new charts forward. And I really think it's important to get that broader monthly perspective. So here is the candle shaping up so far for the month of March. Bit of a red candle, so we need to see some follow through in the next couple of weeks. We're sitting in the middle of our wedge. We redrew this wedge on Tuesday, but let's get deeper into this area here on the 1-year weekly. So let's go change it over from the monthly to the weekly. There's our wedge. The market, the IWM, tried to break out of our wedge yesterday. We'll see. It looks as though the futures are going to start off strong. So we'll see if we get that follow through and that breakout today. Last time we had a wedge drawn in here. It was sort of a drift out. So we'll see if we can see some more market strength here and more of an assertive move. But keeping an eye on this area. I'm going to move it away from the weekly to the daily. That's the price action yesterday. So it's trying to break out of our wedge. We'll see if it can indeed do that. It's coming into this really thin orange line, which marks the top of that consolidation area. It's very rough, the area, but we'll see if it can get past here and show us more bullish strength. But with price on the Russell up and over that 8-day EMA that we use as our guide, we're going to put a new chart forward today. And so the chart we're featuring today is Manulife Financial, MFC. It's a dual listed, it's a Canadian company, but it's dual listed on the US and Canadian side. We're looking at the US chart. Before I get into the chart though, let me tell you a little bit more about the company. A lot of Canadians will know it. It's a very big financial corporation. Through its subsidiaries, it operates as a life insurance company. It provides various financial protection and wealth management products and services. You know, at Chart of the Day Cafe, it's all about value, and Manulife Financial has a really nice high value score. Second thing I look for that's a must is growth, and Manulife has a forecasted earnings growth rate of 19%. Third thing I look for, it's not an absolute must, but in this case it is there, is a dividend yield. Manulife has a current dividend yield of 3.32%. So with that, let's get into the chart. We're looking at the 5-year monthly. You can see that overall it's in an uptrend on the big long-term time frame. It's coming into this area of interest to me. So you want to be aware that it's coming into this area where it had a prior high. And so it needs to get through this area. But should the markets continue to show strength, Manulife may indeed get through this area and continue higher. I like this formation and the way it's behaving over here. So let's get into the 2-year weekly chart and take a look at it. You can see that it's been consolidating for a while. So I'm going to draw an area of support. And it looks as though it wants to lift here. So it's all about watching this line, because you can see that the Canadian markets might be a little bit vulnerable here. Things could turn around very quickly in this environment, but should the markets continue higher, I think Manulife looks really interesting here. But you want to be aware of having a line underneath your price to make sure that if things reverse, you're not holding anything. So that's the 2-year. Let's take a look at it on the 6-month daily. You know that we use this blue line as our guide, this 8-day EMA. Manulife's been behaving well up in this area. It consolidated recently for about a week and a little more, And yesterday it had that nice lift with volume off this area of support. So I'm going to move it into the 3 months so you can better see it's got a fresh 3 and 8 cross emerging. So I like this pattern because you can really identify where you might be wrong. I'll let everyone decide where that is for them. Everyone has their own way of doing things, but for me it's the pink over the blue, the moving average is crossing, and lift. If it starts to reverse, I would not be interested, but I like the way it's behaving here. We also like to look at some other factors around our featured charts, and because it's a Canadian pick today, let's take a look at the TSX. This is the 6-month daily chart of the TSX. So you can see it had a nice strong day yesterday. It looks as though it may want to move up and over the 8-day EMA. You want to be really careful though here, because this pattern can be interpreted as a head and shoulders pattern, which means it can go either way, up or down. But head and shoulders patterns are typically pretty strong, so we'll see. We want to get that follow through for sure. Also, let's take a look at the financial sector. I talked about this in the discussion notes yesterday on the YouTube channel. The financials didn't really participate yesterday, so we need some follow through. We're looking at the XLF, by the way, which is the ETF for the financials on the US side. So Manulife I would consider in the financial sector, so you want to make sure that we get some strength today in the financials and they move out of this wedge, and that the TSX and Manulife get that follow through as well. We also like to look at seasonality, so let's go look at TSX seasonality first. You can see this is from equityclock.com, amazing site, love it, always refer to it. You can see that the TSX typically comes into seasonal favor at this time of year. It doesn't mean it's going to happen this year, but it's always nice to have that as a data point, you know. Also, Manulife Financial itself comes into a period of seasonal strength. Again, this is from equityclock.com, so you can see that beginning this time of year, it comes into that seasonal strength that usually lasts through till the summertime. I'm also going to include a BNN interview, Bill Shaw. It's one of his top picks. I will include the interview. It's fairly recent. He says it's well managed, it's got an excellent dividend, and will benefit from rising interest rates. So I will include this interview with today's video as well. And so let's go back and check the boxes for our featured chart today. We looked at the market overall, the IWM. We can see that it's showing strength in an overall uptrend and up and over the 8-day EMA on the daily chart. Check the box. Because MFC is dual listed, we looked at the TSX. We can see that the TSX is showing strength here. We need follow through today though, and coming into a period of seasonal strength. MFC is in the financial services sector, so we looked at XLF, which is the ETF for that sector on the US side. We can see that it's in a long-term uptrend on the 5-year chart and at an area of possible support on the 2-year. We looked at that little wedge. We want to see a breakout of that little wedge. MFC is in an uptrend on the 2-year chart and at an area of possible support. It's got a great value score. It's got the growth score we look for with a forecasted earnings growth rate of 19%. It's got a dividend yield currently of 3.32%. It currently has a 3 and 8 EMA cross, just. Seasonality in its favor, we looked at equityclock.com, Bill Shaw, and it's got analyst support. I'm including that interview. Current PE is 12.19. The next earnings date is May 4th. And the changing story, why would it lift here? MFC should benefit from a rising rate environment. As a reminder, I just wanted to say, if you like these videos, please subscribe to our channel by hitting the red subscribe button on the home page of our YouTube channel. Also, check out this discussion section Monday through Thursday after the close. I put in little notes here to give you the heads up on past Chart of the Day Cafe picks. So what we do at Chart of the Day Cafe is corral the best of the best value and growth stocks. And when they get those fresh 3 and 8 crosses or start to lift, because we've got quite a collection of them now, I will post it in this discussion section, and they've been really doing well. So worth checking this out for sure. With that, I'll leave you. Have a great weekend, and we'll put another video out next Tuesday.